So, what happens when billions and billions of dollars go to war in the Indian stock market? Well, this week, the answer was absolutely nothing. The result of this epic clash was a complete and total standstill. It's a pretty wild story, so let's break down exactly how that happened.
I mean, if you just glanced at the headlines, you'd think it was maybe the most boring week you could possibly imagine for the big market indices, but you would be so wrong. See, underneath that really calm surface, a massive, massive battle was raging. And that's the real mystery, isn't it? With so much activity, so much money flying around, why did the market essentially go nowhere?
Okay, just look at these numbers. For the week ending January 16th, India's main stock market indices, the Nifty 50 and the Sensex, were, well, they were practically frozen. A gain of 0.04% here, a loss of 0.01% there. It's basically a statistical rounding error. But you absolutely cannot mistake this stillness for inaction. No, this was the result of two huge opposing forces canceling each other out perfectly.
And that really gets us to the heart of the story for today. A classic, old-fashioned tug of war, with billions of dollars pulling as hard as they could on opposite ends of the rope. So, the big question is, who were these financial giants locked in this incredible struggle? All right, let's meet the two teams.
So, in one corner, you've got the foreign institutional investors, or what we call FIIs. The easiest way to think about them is as the big global funds making decisions based on international trends and what's happening all over the world. And in the other corner, you have the domestic institutional investors, or DIIs. These are India's own heavy hitters. We're talking mutual funds, insurance companies, and their confidence is really built on the view from right here at home.
And this, right here, is the heart of the battle. Look at this. Foreign investors sold, and they sold heavily, pulling out over 18,000 crore rupees. That's more than $2 billion US. Now, normally, an outflow like that would absolutely crater the market. But the domestic players, they didn't just hold the line. They charged forward, buying up almost 22,000 crore rupees worth of shares. They soaked up every single sale from the foreigners and then some, creating this incredible stalemate.
Which, of course, leads to the big question, why the split? Why were global funds pulling out while local funds were doubling down with so much conviction? Well, the answer is kind of fascinating. Both groups were looking at the exact same economy, but seeing completely different signals.
Probably the best way to think about it is like this. India's economy right now is driving with one foot on the accelerator and the other foot on the brake. And, investors were looking at the very same dashboard, but just focusing on totally different dials.
So first, the good news, the foot on the accelerator. Consumer inflation in December was just 1.33%. That is incredibly low, way below the central bank's 4% target. For domestic investors, this is a huge green light. It gives the RBI all the room it needs to support economic growth. And that accelerator is really being pressed hard. Industrial production surged by 6.7% in November, with manufacturing alone jumping an impressive 8%. I mean, this is a crystal clear signal that the economic engine is firing on all cylinders, and that's what's fueling all that local confidence.
But here's where that foot on the brake comes in. While prices for us consumers are low, wholesale inflation just turned positive. And that's like an early warning sign. It hints that costs for producers are starting to creep up, and that could eventually feed into higher consumer prices down the road. It's a real reason for caution.
And this is very likely what had those foreign investors so nervous. The U.S. Federal Reserve basically announced that high interest rates are here to stay for a while longer. So, if you're a global investor, you're thinking, why should I take a risk on an emerging market like India when I can get a safe, solid return in the U.S.? It's a classic reason for global money to just pull back a little.
But this tug of war wasn't just happening at the big, broad market level. Beneath the surface, there were some huge individual deals being made, and each one tells its own unique story.
This table here gives us a really good snapshot. In Poly Medicare, you had a large global fund selling over 300 crore rupees that looks like they were just taking some profits off the table after the stock did really well. The Force Motors deal? That seems more like a strategic shuffle of shares between two companies that are related to each other. And the Angel One transaction, with a perfectly matched buy and sell, has all the hallmarks of a high-speed trading firm just repositioning its portfolio. Different players, different motive. But all of those deals, as big as they were absolutely dwarfed by one huge piece of corporate news. And it all comes down to this single number.
$4.4 billion. That's the price tag for Japan's MUFG Bank to take a 20% stake in Shriram Finance.
Now think about that for a second. In the very same week that short-term foreign traders were selling off billions, one of the world's biggest banks made one of the largest foreign investments ever in India's financial sector. This wasn't just a trade. This was a massive, long-term bet on India's future.
So, after a whole week of perfect balance and all these conflicting signals, where does that leave us? What should we really be watching for going forward?
Well, here's the takeaway. The market is truly balanced on a knife's edge. You've got the confidence of domestic investors perfectly counteracting the caution of global players. The tiebreakers next week are probably going to be two things. First, the quarterly earnings results from major companies, and second, any hints we get from India's central bank about its future plans.
And so we are left with this perfect standoff, a really bullish local story versus a cautious global one. Which side is finally going to break the tie and win this tug of war? We will be watching very, very closely to find out. Thanks for joining me.